JBlog, February 28th, 2010. Start today by looking at oil. That's crude oil. And there is two ways of looking at this chart. This is a 1 year chart, we have spent a large part of this year basically in an uptrend channel. And thing to be remembered with trends is that these things do sometimes happen. So just because we're slightly outside of the trend line doesn't necessarily mean that the trend is no longer in place. So we poked our head out here, we poked our head out there, but we once again went back into the channel. Of course, there's a couple of ways of looking at this. Either we are still in the up channel, or alternatively we could look at this as a possible head and shoulder formation, with this being the head, this being a right shoulder that is just forming, and this being another right shoulder. It's not a pretty head and shoulder, I must agree, but it is technically possible that this could be a head and shoulder. And then of course we have here this line at $75 potentially being some support. But of course we have these dips below. So we'll see. The more interesting chart at this point to look at is natural gas, which is once again dropping. It went from a high of $6 and it has broken through the 5. So that's sort of making a statement on natural gas, which is still one of the main driving energy sources behind the economy. I came across these three charts that talk about seasonality on oil refiners and natural gas. Oil has a seasonal almost 4% price increase in March. That's the highest, and then it falls off during the spring, and then it goes to a high in the summer, and then it falls off in October and November. Refiners, the biggest was in February for the spring part, but then we have natural gas, which has its highest in March, average 7% increase in price. We'll see if that holds this year as well. And of course, if that doesn't hold, then that tells us a lot about the so-called economic recovery, which, yeah, I don't believe in it. And if we don't have a new high in gas, in fact, if gas falls to a new low, then that definitely tells us something about March. And another story that I like to I've been following now is coal. And here I've identified one coal company which I've shorted now for a little while. I took Progressive Parts in this short. It's ANR, which is Alpha Natural Resources. I only remember the letters. I don't really remember the company names. In my opinion, one of the weaker uh, coal companies. Now, the coal play, a short coal play, is basically a play against China. That the Chinese recovery is not as, or the Chinese are not going to be the savior of the planet. This particular company, if that is true, then this particular company, having one of the highest PE ratios in that industry, would of course be hit quite hard. Analysts wise, um, this is a tool that I'm using to kind of sometimes get ideas. It's called Invest Tools, to have ideas about where the market might be going next. And this chart that they have here is where they see money flowing. Are they seeing money flowing in and out of sectors? Here's the coal sector. If we look at the coal chart, which is 54 coal companies, and what their combined index looks like, we see a potential weakness forming here in just in the last 2 months. So that is certainly not particular bullish on coal itself. And here we have the InvestTools money flow right here. Going from 99.99, this was again, this is the China story here, and 98, 96, 90. There's a potential drop off here. So money could finally be draining out of coal. Now then we look at all the coal companies, best performer and worst performer, and there is our Alpha Natural company. We go into the Alpha Natural company. I'll talk some more about InvestTools at some other point, but it gives you a general idea of how they're doing. It's very much a fundamental slash technical analysis tool, and of course the PE ratio here looking very bad. One thing they have, which is interesting, is insider trading, like how many of the insiders are actually selling the stock, and there's some pretty heavy selling going on within the company, so not a very good sign. The financial score that InvestTools assigns to it is not very good neither. So overall, I feel quite happy shorting this and basically playing um, against coal, against China, against the recovery. Thinking that this is a good potential target. So anyways, that's what I'm doing right now. I'm shorting this. The stock, again, the stock follows general market with a lower high for the time being. Now, Friday and Thursday were quite annoying, very frustrating right now. Just what I see is an enormous amount of um, interference in the way the market really should flow. Well, should I think it should flow. Um, this is the last 5 days. It's a 5 minute chart, and we have big drops like this. We had on Thursday a big drop on. We had bad housing and bad this and bad that, and then everything was looking rather bearish, and then this spike happens right here, and trashes your short positions again. And in environments like this where money doesn't seem to matter, where credit is still easy to get for Wall Street, and where trillions of our children's money is basically pumped into sustaining something that is frankly dead, um, is just silly. Anyways, so in my mind, you do have to take a longer term look at this point, because I mean, how do you trade something like this? It goes down, then it jumps up, it drops down here. You can day trade this, but everything happens in the first 5 minutes and can go this way, it can go that way, it can go any which way. I cannot trade this. I don't know. Maybe somebody can. I cannot. So I just have to look more at the fundamentals, look at companies like ANR and say this company is fundamentally sick and it's going to go down. So you take a longer term approach and you avoid those penny trades, because I can very much see another 1987 type of crash happening at one point where the entire market just loses faith, where this kind of thing happens, a drop at the beginning of the day or this one, and everybody figures, oh, I'm going to buy in because they're going to fix it again, and then they don't fix it, or maybe it's too big to fix, maybe because the PPT will of course work in the futures market, which means they buy a large futures position, saying, you know, basically manipulating the market via the futures, and it doesn't work that day. So I can really see another 1987, and I think you have to be strategically placed to exploit something like this. This is not something that washes over in a few days, a few weeks, or a few quarters. This is a big mess that we've created here, and it's going to take a few years to play out. So short continues to be the place that I am, and I feel perfectly happy with that. Good luck next week. Hope you do well, make lots of money, and all the best.